Welcome back to the channel, everyone. Today I want to talk about how shorts are in big trouble, because even CNBC is saying that at this point, a recession is almost inevitable. So stay tuned and let's make some money. And now I want to dive straight in with the key information. So, the Street, which is partially owned by Jim Cramer, is even reporting that short sellers are not in a comfortable position. This is Bronte Capital's Amalthea Fund, which has short positions in GameStop and other meme stocks, announced unsatisfactory Q1 results. It says the battle between GameStop and AMC apes and the bears is far from over. Lately, GameStop and other meme stock companies have been handing it to those who've been betting against them. The Amalthea Fund, created by Australian-based capital management firm Bronte Capital, has a long and short strategy. On the short side of things, they've taken up short positions betting against almost every single major meme stock, including both GameStop and AMC. Now, obviously, the reason why this hedge fund posted unsatisfactory results is because towards the end of March, AMC and GameStop started to run up. At the end of March, AMC closed its trading around $24.60. Now, AMC around $24 was causing many hedge funds, just like Bronte Capital, to be feeling the pain. Yes, obviously since then, AMC has fallen back down to around $15, but has not yet fallen below those previous March lows at around $12 to $13 per share. I think AMC has been holding up very well, considering the wider market, aka the S&P 500 and the QQQ or the Nasdaq, has been falling and has fallen past those previous February and March lows. We know that as the market is falling, AMC and GameStop will fall alongside the broader market, but when those margin calls start happening and the market starts crashing, AMC and GameStop will rocket off. Obviously, when the market is crashing and these hedge funds are feeling the pinch and end up forcibly being liquidated, they will be forced to cover their short positions. And many of these hedge funds, like Bronte Capital, were already feeling the pinch when AMC was only trading around $24 per share. Imagine what will happen when AMC starts trading back at around $34, $50, $70 and above. And that's why I think when one domino falls and one hedge fund ends up being liquidated and forced to cover their AMC shorts, all of the other dominoes will fall as well and AMC will squeeze. I think it's important to remember that even though AMC is falling at the moment, the current price of AMC doesn't matter because the market hasn't yet crashed and these hedge funds haven't yet been forced to cover their shorts. We know that these shorts have been adding to their short positions all the way down. The shorts added at $34, they added at $30, they added at $25, $20, and again at $15 to continue pushing the price of AMC down. Many of these shorts obviously have an average short position of below $10 per share or below $15 per share, and that's why they're still in the red and they haven't yet got a profitable short position. And obviously these shorts are losing more and more money as the wider market and the Nasdaq continues to crash, and therefore will be feeling the pinch even more as the days go by. And obviously when that recession and that market crash does hit, the shorts will be forced to cover their short positions, causing the AMC squeeze. And at this point, not just me, but even CNBC is saying that at this stage, a recession is almost inevitable. And this comes directly from the former Fed Vice Chairman, Roger Ferguson. He said that at this point, the best we can hope for is that the downturn is mild. This article says that for months, former Fed Governor Roger Ferguson has worried the risks of a recession were rising. Now, he said, a recession in 2023 or even 2022 this year is nearly unavoidable. And he said that at this point, the chances are definitely over 50%. And he said it's a result of fresh signs of spreading global economic weakness, including in China. He said the rest of the world is also slowing pretty dramatically just when the Fed and other central banks are starting to raise interest rates to try and curb inflation. And he said despite the signs of a slowing economy, the Fed has no choice but to continue to raise those rates. He said the central bank will validate the market's expectation of several half percentage point rate hikes this year. And he said if the economy could escape with only 2 quarters of negative GDP, aka a 6-month market crash, he thinks it would be a win. And even The Guardian, a UK newspaper, is reporting that even the Bank of England believe they are duty bound to actually trigger a recession to try and curb inflation. Guys, if you didn't already know, you can currently get 5 free shares of AMC worth up to $3,500 each, and a free share of Twitter on top of that. So that's around $17,500 worth of free shares just for signing up with Moomoo. Use the link in the description below and making your first deposit. Moomoo and Futu have also officially announced that Moomoo does not accept payment for order flow, and therefore you don't have to worry about your trades going through sketchy dark pools or being given to Citadel. Moomoo also recently won the award for being the best trading platform at the FinTech Breakthrough Awards. Moomoo is very easy to use, it's incredibly customizable, and it will help you to trade like a pro. Moomoo has tons of technical indicators and advanced charting tools. Moomoo publishes daily short selling data, position cost distribution, and much, much more. So guys, be sure to sign up to Moomoo using the link in the description below to get up to $17,500 in free stock and a free share of Twitter on top of that. An ex-official says policymakers must shrink the UK economy to limit upward pressure on prices made worse by Brexit and current inflation. The article says Britain's central bank policymakers are duty bound when they meet this week to push the UK into recession to cap rising inflation. I think it's super interesting how the mainstream media and these officials have gone from one hand saying that a recession will never happen to now saying that a recession is almost inevitable and that the Bank of England and policymakers are duty bound to actually cause the recession. Over in the UK, the Monetary Policy Committee meet on Thursday and is expected to increase the UK interest rate by 0.25%, taking the central bank's base rate to 1%, the highest level since 2009. And again, similarly to in the US, inflation in March peaked at 7%, its highest level for over 30 years. And right now, Citigroup traders are dealing with the highest volatility since 2008. The article says that Citigroup chief exec said that trading desks are dealing with volatility levels that markets haven't seen in more than a decade. Which is something that I find very, very interesting because the VIX seems as if it's only at around 32 points, but Citibank are saying that they haven't seen volatility like this since 2008. So it must mean that the VIX is really somewhere around 53 points or above. And therefore the VIX should be similar to 2020 or to 2008. But obviously the VIX is currently being subdued by the powers that be that are trying to keep this never-ending market cycle turning on. But obviously there will come a time where this never-ending market cycle of pumping large cap stocks to increase available margin comes to an end. It says traders are coping with inflation that's at its highest level in a generation and investors who are increasingly worried about the likelihood of a global recession. Not just a recession in the US or not just a recession in the UK, but a global recession. And as an example of volatility, she mentioned trading on Friday, where bonds sold off at the same time as equities, and normally the two have an inverse relationship. Bloomberg are also saying that the end of easy money brings a $410 billion global financial shock. It says the global shift away from easy money is poised to accelerate as a pandemic bond buying blitz by central banks swings into reverse, threatening another shock to the world's economies and financial markets. It says that already rising bond yields, falling share prices and the stronger US dollar are tightening financial conditions, even before the Fed's push to raise interest rates gets into full swing. Obviously the Fed has to raise interest rates and taper spending in order to curb this inflation. But obviously inflation is already high, bond yields are already rising and share prices are already falling before this taper has even started and before these interest rates have really even been raised. And obviously that just goes to show that at this point a recession is almost inevitable and the market will end up crashing. Which obviously is very good for AMC because when the market crashes, these shorts will be forced to cover their short positions, causing the AMC squeeze. And finally for today, I wanted to quickly clear up the AMC shareholder meeting and just how many shares are being held by just how many investors. As Donahue George says, if 10,498 entities own 516 million shares of AMC, according to this filing, exactly what do the other 4 million other shareholders own? And as I explained to the guys in the Discord, which you can find using the link in the description below, I think there's a bit of confusion into how this shareholder meeting is worded. It says a quorum is required to transact business at our annual meeting. To obviously meet these requirements of a quorum, I think there's a certain number or a certain percentage of shares that have to be voted on. Obviously, there's 516,820,595 shares, and I think that number is around 35% of these shares must be voted on to make any concrete decisions. 35% of 516 million is around 180 million shares, give or take, maybe slightly less than 180 million. And I think what this wording is saying is that 10,498 users on ComputerShare and 10,498 registered businesses hold around 8 million shares, and therefore there's 172 million more shares that must be voted on to cause anything and any decisions to actually pass. And that's why it says that there are some shares of common stock issued and outstanding held by 10,498 registered shareholders on ComputerShare. Therefore, the holders of at least 172 million more shares of common stock must be present in person or represented by proxy at the annual meeting to constitute a quorum. And therefore, I think what this is saying is that 10,498 registered users and businesses hold around 8 million shares, and therefore you need an extra 172 million shares worth of votes to meet that minimum requirement of 180 million shares voted on. I don't think this is saying that 10,000 users hold the 516 million shares, because that would be saying that the float is owned around 400 times over. We know there's around 4 million individual shareholders, so if 10,000 users hold the float, then 4 million users would own around 400 times the float. Now that would mean that there isn't 2 billion synthetic shares, there isn't 20 billion synthetic shares, there would be around 200 billion synthetic shares. And I think to me, 200 billion synthetic shares does sound slightly unreasonable. I do think there's between 2 and 20 billion, but not 200 billion. And as John Merriweather said in an email on April 22nd, there was 516 million AMC shares. There's approximately 4 million shareholders of these 516 million shares, and of those 4 million shareholders, there's 10,498 of those who have registered on ComputerShare. And therefore, unfortunately, this screenshot isn't showing that the entire float is held by only 10,000 individual apes. So hopefully that cleared everything up. And guys, be sure to let me know down in the comments below what you think about the shorts being screwed and what you think about a recession at this stage being almost inevitable. And as always guys, if you enjoyed this video, be sure to check out some of my others. Alternatively, subscribe to the channel and ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers.